Yeah, I mean, it was one of the most, I think you wrote about this as well, and I'm sure we spoke about it. One of the biggest mistakes I think the US made was the seizing of the Russian private assets and then the seizing of the reserves, essentially making them worthless. Because that sent a signal to everybody that US money is not good.
Well, it certainly sends a signal that you don't have all of your savings in something that somebody could seize. And so, I think on the margin, that's going to, encourage countries to think about saving in a stateless currency, right? Like that's what Bitcoin is a separation of money and state, right? So it's a currency, does everything other currencies do, but it's not controlled by any one nation.
So if we're looking at the US regulatory side, what are you expecting to change? Because I'm starting to think, how far do we move back towards some variation of ICOs, for example? Because it is a great vehicle for capital formation, needs tightening up. Things like the US users can't use perps and other margin products while everybody else can. Where do you see the regulatory landscape shifting over the next year or so?
Yeah, I actually don't spend a ton of time on the regulatory side since we can't really influence it ourselves. The main theme, though, is regulatory clarity, and that's been, I think, what's lacking, is that because of the lack of clarity, some things like trading of tokens went offshore to places like the Bahamas, and, we've had some negative consequences from that. So I think any clarity that the agencies in the United States could provide will be helpful. And I had served as chairman of Bitstamp for a long time, and it is difficult to manage a business when there's nothing written down. You have no idea what is a security, what's not a security. So as soon as there's more clarity on that, that will help. And then I think the bigger part is to help institutions get engaged in the space. In 2021 and 2022, a lot of very big institutions were doing a ton of work, going to get engaged. Some did some small investments in the space. And then, we had, Terra Luna and FTX and all these bad things happen. And with the lack of regulatory clarity, it kind of scared off a lot of institutions and they put it on ice. That's my biggest prediction, is that once we do have regulatory clarity, bigger institutions will come back to the space over the next, say, 2 years and really start investing in it in a real way.
I also think the finance sector will go all out for this as well, because they know how much efficiencies within this, whether it's in the payments or whether it's tokenizing equities and all other kind of financial assets for settlement, clearing, everything else. It feels like that is going to be, whether it's this cycle or next cycle, but that's going to be enormous when that happens.
No, I agree with you. And I think the ETF was huge in kind of breaking that log jam, where for years I'd be out there evangelizing for blockchain, and you talk in some firm and they would say, oh, well, we can't invest in Bitcoin for compliance reasons. I'm like, well, that's interesting. I've run a couple compliance departments and I have no idea what you mean. What do you actually mean by that? Like, why can't you do Bitcoin for compliance reasons? And then they just give the circular, well, for compliance reasons, And so now that BlackRock and all these very reputable firms have Bitcoin products out there, that just kills that. That was kind of the last, inane reason to say no, but it was a reason a lot of big entities said no. But now that you have, $35 billion flowed into branded ETFs, like BlackRock and Fidelity. And
the cryptocurrency market witnessed a notable shift as Bitcoin's price reacted sharply to the announcement of a new executive order signed by U.S. President Donald Trump. The order established a working group tasked with researching and designing a national digital asset stockpile, a move aimed at positioning the United States as a leader in the global digital asset space. This development, though significant, fell short of investor expectations for a Bitcoin-specific strategic reserve. As a result, Bitcoin's price, which had earlier surged to $106,850 following a cryptic social media post by Senator Cynthia Lummis, dropped to $102, 220 minutes after the order signing. The initial optimism stemmed from Senator Lummis' post, ending at big things on the horizon, leading many to speculate about a potential executive order dedicated to a Bitcoin reserve. However, it was later revealed that her announcement pertained to her appointment as the chair of the Senate Banking Subcommittee on Digital Assets. This revelation tempered market enthusiasm and underscored the fine print of the executive order. which prioritized broader digital assets over Bitcoin exclusively. Market analysts noted that the executive order's language highlighted a potential stockpile sourced from cryptocurrencies, lawfully seized by federal authorities. While this broadened scope was celebrated by industry leaders as a step toward mainstream crypto adoption, it dampened the immediate bullish sentiment. Investors recognized that establishing a Bitcoin-only reserve would require more than a single executive action, aligning with the market's tendency to buy the rumor, sell the news. Despite the short-term price drop, the order signifies a paradigm shift in U.S. crypto policy. Prominent figures, including Michael Saylor, lauded the move as a milestone for the industry. Analysts like Will Clemeny urged patience. Bitcoin's response illustrates the market's intricate dynamics.
Yeah, the other thing that we're looking at Real Vision and where the world's moving is I think we will disrupt asset management itself. The idea of crowdsourced, tokenized asset management, where people form an opinion about maybe this is a basket to invest in, you spin up a token, and it creates the ability for people to create their own product. There's no real reason we have asset managers in many instances. You know, any group of smart, well-educated people can get together and try and outperform versus hedge funds or benchmarks or whatever it is.
Oh, yeah. No, I love that concept that if there's some talented managers wherever they are around the world, you can have all kinds of league tables that show their risk-adjusted returns versus everybody else, and money can flow to the better managers. You know, all that is possible, and it's certainly coming. And my favorite example of that was the Constitution DAO. You know, remember that a couple of years ago?
Yeah.
Where in days, a group of people that did not know each other, didn't trust each other, had no reason to be connected, decided they were interested in the same thing, purchasing the last privately held copy of the U.S. Constitution. They got $40 million together in a few days, and they went into Christie's or Sotheby's, I forget which auction house had it, and competed with it. And the fun bit about that, you know, they didn't win. Ken Griffin
stole it from them, didn't he?
Yeah. The founder of Citadel, quote, won the auction, but the concept was so cool to see. And their final tweet was, "How much for Citadel?" And that is what it's about, right? It's like you can get a group of people, maybe millions of people together, and they could do that, like start buying money managers and start, intermediating, credit and all that kind of stuff. So it is definitely going to happen.
Well, look at the instantaneous capital formation that's happening on Pump.Fun and meme coins, right? So forget whether you care about the meme coins or not. What you've got is instant capital formation and instant value accrual.
Sure.
Which is, to your point, we've now gone from the DAO idea to suddenly super liquid instant pools of capital that follow an idea. Yeah. It's, as you say, this is coming at everybody very fast. They don't realize it, but this is where it's going.
No, I agree. I think it is fascinating. And obviously there's going to be some things that flame out and go to zero, and then there's going to be some things that work well, and that's what, the creative destruction of the markets are all about. But I agree with you. It's doing everything much faster and much more distributed, right? Or, it's letting anyone with a smartphone participate in the financial markets.
So then that begs the question is, where does that leave VC in like 4 years' time?
Ethereum may be on the verge of a significant breakout following the U.S. Securities and Exchange Commission's decision to revoke SAB 121, a controversial accounting rule that had long deterred financial firms from offering crypto services. According to Marcus Thielen, head of research at 10x Research, this development marks a critical turning point for Ethereum, with the potential to accelerate the adoption of decentralized finance, DeFi services, and solidify Ethereum's position as the backbone of the crypto ecosystem. SAB 121, implemented in March 2022, required financial institutions holding cryptocurrencies to record them as liabilities, creating hurdles for wider crypto adoption. Its revocation is seen as a victory for the crypto industry, which had persistently lobbied against the rule. Thielen highlighted that Ethereum's current price chart displays a low-risk, high-reward formation, presenting a compelling buying opportunity for investors. At the time of writing, Ethereum is trading at 3,325, having retraced from its January 7th high of 3,707, but still showing strong potential for an upward move. Crypto analysts and traders are increasingly optimistic about Ethereum's prospects. Some predict a climb to 7,000, citing favorable market conditions and the possibility of regulatory approval for Ethereum-based exchange-traded funds, ETF. Additionally, Ethereum co-founder Joseph Lubin recently hinted at the Trump family's potential plans to launch Ethereum-based ventures, adding another layer of intrigue to the asset's future trajectory. With a prudent stop-loss strategy, Ethereum investors may capitalize on the anticipated breakout and benefit from the shifting regulatory and market landscape. Don't forget to like and subscribe, and let's keep this bull run going.